Good morning, everyone, and welcome. Thank you for spending your morning with us. Welcome from a sort of misty Cape Town. Hopefully the mist will burn off and we'll have rise to a beautiful day. So we're here today to discuss Dr. Frans Cronje's book, The Rise or Fall of South Africa. Very topical at the moment, so hopefully there should be quite exciting. Yeah. I'm not sure what, if we could, all right, so just some housekeeping rules here to do with the webinars. If we have a look below, you can see while the participants are sort of enrolling, you can see there's a question and answer function. There's also a chat function. So please take this opportunity to let us know who you are and what company you represent. A lot of you guys are our clients and current partners. And yeah, we just like to sort of say thank you for your business. Without you, we wouldn't be here. So spend some time putting that in now. We're talking about the rise or fall of South Africa. And I think two of the most important questions that you could ever ask yourself as a South African are this. So let's run a quick poll and see while we're waiting for everyone to load. Do you prefer Marmite or Bovril? Multiple choice question, but you can only pick one. I prefer Marmite. My wife prefers Bovril. Needless to say, we've got Bovril in the cupboard. Do you braai using wood, charcoal, or gas? This is interesting, depending on what language is your home language. I think wood, obviously, for me, but charcoal is an option, and then gas on the barbie, mate, if you're in Australia or potentially in England. So it'll be interesting to see. Thanks so much. We've got Kunrad Steyn from Pam Golding. Welcome. Neither Marmite or Bovril from Joash. Interesting. Okay, maybe fish-based for him. Who knows? Yeah, so welcome, guys. Chaz Everett in Pretoria. Milieta, thank you. So a couple of you guys joining in, and we're just waiting for everyone to come in. Right, let me introduce myself. So I'm Graham Barrett, one of the directors from Currencies Direct here in South Africa. And again, just want to welcome all of you and thank you for spending your morning with us. We are order of events. We're going to give you a short kind of 2-3 minutes insight into Currencies Direct, who we are, what we do, what value we can add to both you and your clients. And after that, we'll move into Dr. Frans Cronje. He'll give us his synopsis or analysis of the book. So looking forward to that. All right. Just want to see if I've covered off everything that I'm meant to be doing. Okay, so I think let's have a look and see what the answers are to our poll. If you guys had a chance, we're up to sort of 220 registrants at the moment, and of that, 59% are in the Marmite camp, which is magic. Thank you very much for confirming. And would obviously, yes. Okay, that's good. I hope I probably persuaded you a bit. So that's good. That's good too. All right, so let's move on quickly. I know your time is precious. What we want to do is we want to just sort of chat a little bit about Currencies Direct, who we are, what we do. And for that, I'm going to hand over to my colleague and good friend, one of the foreign exchange specialists we have, Abel Skuman. Audio over to you.
Good morning, ladies and gentlemen. Thank you. Thank you, everyone, for joining us. Yeah, just to reiterate what Graham says, we realize that it's the end of the year, it's manic, COVID has stolen a lot of our time and there's a lot of stress around. So we really do appreciate the 40 odd minutes that you're going to be sharing with us. And we hope to pass on some valuable knowledge and get you guys thinking, get everyone thinking and ensure that we make the right decisions so going forward. So from my side, I don't want to talk for too long. I'm just having my little technical difficulties here, as we all do. There we go. So I just want to tell you guys why, or reiterate rather, why you guys are using us as a preferred foreign exchange provider. And if you are not yet using us, why you should consider changing over. So with Dr. Frans Cronje in mind, we need to all sort of take stock, slow down a bit, look at where we are and reflect, and then use what we've got and analyze and sort of plan our way forward. And when you come to planning your way forward on a foreign exchange side, we'd like you to include us in that journey. You'll see that I'll leave the analysis to Dr. Cronje, but the reason why you should use us and consider using us is for multiple reasons. Mainly, we strategically position globally, truly globally. Very few of our competitors in the banks can say they have the reach that we do. And also very few of them can say that they've done the amount of trades and the flow that we've done. Last year alone, we did just short of 150 billion Rand, which is a significant amount of money, and 500,000 odd transactions. So if you're concerned or you consider a transaction internationally, your sort of natural way of thinking, normally we all grew up thinking bank. I'd like you to reconsider that thought and move away from your bank and rather give us a ring and involve us in these discussions. We're here to ensure that you get the best possible service, obviously better foreign exchange rates, and actually get hold of someone. That's the most important part, is being able to speak to someone. In addition to our global presence, I just want to give a quick overview on our banking partners, which we've chosen globally. Mercantile Bank has been our sort of stalwart banking partner. We've had them on board for many years. And for those of you that have Mercantile Bank accounts, you would have received an SMS or perhaps an email about their banking license being revoked. Please don't fret or concern. Mercantile Bank was acquired by Capitec not too long ago, and that's why there's a merging of licenses. And so from now going forward, it'll be on their license. You'll see in addition to that, there's Barclays Bank internationally, which aids us and helps us moving money outside of the borders of South Africa, which again positions us in a unique way to truly offer you and your clients a tailored international foreign payment solution. Now, enough from my side. I want to hand over to Dr. Cronje soon, but before we do that, I just wanted to, we spoke about the braai. I don't even know why gas is on there. To be honest, I'm Afrikaans, so it boggles my mind. And you can see that poll was created by Engelsman because they make mention of charcoal. If you're an avid braai like me, you'll know there's a difference between briquettes and charcoal and wood and so forth. But anyway, talking about the braai, we want to add some value, and that's something you can discuss around the braai. We've got a daily email. Most of you receive it. If you don't, please let us know. Graham's going to share some links with you in the chat function now. Click download. For those of you that do receive the mailer, you'll know what we try and do is take away the noise, remove the collateral and the nonsense, and give you a concise view of where the currency is currently, where the country is from a political view, and where we will be moving, and how that's going to impact your international transaction. Below that, there's a weekly podcast. During COVID, we were all stuck at home and we missed you guys. We're personable people. We like sharing face-to-face time, but this is the new era. And the daily or the weekly podcast was born to sort of share our voice and give you a bit more of an in-depth synopsis. Talking about in-depth, Currencies Direct is very positive about South Africa and where we are heading. And we've decided that because of all the negativity out there and the negative news, we want to give you guys something that's a bit more positive. Dr. Botha, who's also a guest on today's presentation, he's ever optimistic economist, probably the most optimistic economist in the country. And he does put a lot of effort into creating the bright side. You would have received it yesterday. For those of you that are on the list, if you are not, read that document that Graham's just shared. get a hold of us and let us know, and we'll make sure that you get the next one, because all it is a snapshot of what's great out there and why you need to reconsider if you've got a negative sort of slant or view. In addition to that, most importantly, we're foreign exchange specialists, so we would be weird not to include a rand analysis in there, and he's got the currency compass. What the currency compass is looks at the rand over a long term and the real effective exchange rate of the rand. Why is that important? The rand jumps up and down all the time. I mean, we all thought Joe Biden would win the election. He may still, but Donald Trump's much closer than we thought he would get to. The rand's jumped from 16 odd when we thought Biden would win it to swinging all the way up to 1650 with Trump, and then back down to below 16, all within 24 hours. That's a major shift and change, which ultimately affects your back pocket. So a longer term view of the rand is important. That's why Dr. Frans Cronje has been brought on board as well. He's going to give us a view on the longer term and why we shouldn't be necessarily maybe be negative or positive, because we believe the rand is going to strengthen in the long term. We'd like you to make up your own mind and listen to Dr. Cronje, enjoy what he has to share and tell you, and then let us know what your thoughts are, and let us join you on that journey in your foreign exchange, the wilderness out there. Cheers, guys. Thank you very much.
Thanks, Adia. Okay, so I've shared a couple of things just to reiterate. Obviously, the crowd, please, our daily mailers. We share 4 or 5 lines on what's happening in the market. We have podcasts, we have a YouTube channel, we've got information, guys, and the information's there for you. Now, enough about us. Kind of more onto the big show and the reason why everybody's joined in here. We're chatting about the rise or fall of South Africa. If you haven't got it, get it. It's a really good read, and Dr. Cronje, having chatted to him about the book, it's interesting. There's different ways and means of taking the information, but I think the key outcome that we're looking to get, and with consultation with Dr. Cronje, is this is here to make you think. So you don't necessarily need to agree with it, you don't need to disagree with it, but take the information, have a think about it, and then pop some questions and answers into the function here, and we'll go through a couple at the end. So just to introduce Dr. Frans Cronje, he's the director for the Center for Risk Analysis, and the Center for Risk Analysis is a scenario-focused research unit servicing the strategic intelligence needs of corporate and government clients. Bottom line is they're analysts, they get a bunch of data, and they put it out there, and it's there to make you think. So without any further ado, Dr. Cronje, thank you so much for your time. Thank you for joining us. Over to you.
Graham, good morning. Good morning to your guests. My name is Frans Cronje. I work for the Center for Risk Analysis. You should be following me on my screen. It says the rise or fall of South Africa. I've got about 40 minutes with you. And in that 40 minutes, I'm going to talk you through the arguments we put out in a book titled The Rise and Fall of South Africa, released at the peak of the pandemic, that looked at how the world and South Africa is going to evolve into the 2030s. A heads up on where all of that's going. Short to medium term, we think it's going to be super rough. In the longer term, we have a fairly contrarian conclusion about where South Africa is going to end up in the 2030s. Don't make up your minds yet until I get to the very end of the story. The order of things for the next 40 minutes as follows: 8 points. We'll start in the rest of the world. What's happening there? We're pretty upbeat there. We've been that since February and March of this year, and the calls we made then, I think, of the steep B recovery, mainly right. Then to South Africa, the politics, what's happening in the country's economy, from there logically to labor, logical progression to education. Eskom gets a shot at 0.6. Then the scenarios, what could happen in South Africa. Urge you to treat all of those seriously. Then I'm going to go out on a limb. I'm going to tell you which one I think it's going to be. Takes us to the end of this decade and into the early 2030s. Let's get underway. The early March, March, April of this year, we put out notes every Monday morning to clients, and we were saying we think the COVID thing is somewhat overblown, and there's going to be a steeper, faster global recovery on the back of it than many analysts were then predicting. Subsequently, I think the data corroborates that view. You're looking at PMIs here, Purchasing Managers Indices, cross-section of important parts of the world. Real lows hit into April and May, figures down in the 30s. That's not something many people would have seen or seen very often. As the lockdowns are released, figures move their way back to that critical 50 points break-even mark, and then really strong numbers, or somewhat low base effect there, but strong numbers into July and August. The UK hitting almost 60, the Eurozone getting up to almost 55, France hit 57. The Australians have got up into the low 50s. South Africa lagging the pack a bit here. This is the IHS market PMI, only in October into the 50s. So the steep V recovery, we think, has happened in this data already. But in the latter parts of these charts, you see the V is concluded, it's expired. And now the long, hard global slog phase, that's how we put it, of the recovery lies ahead. But at this time, we're going to talk about COVID in a moment. We think the short to medium term outlook is still an upward global slog. That kind of call seems to be corroborated in what we see in commodity prices. You're looking at 7 of those here, and then bottom right, something called the Baltic Dry Index that I'll get to in a second. The patterns are steep V recovery. Look at those deep lows that were hit in March in the copper price, for example, saw it in platinum, aluminium, iron ore. Oil did it, but remember that real dip in oil in February, that was the Saudis and the Russians fighting with each other. Coal shows that number of these have beaten their January levels already, although you're seeing the same pattern as in the PMIs, steep V recovery, then some moderation in the trend line. That's a long, hard slog starting. Bottom right is the Baltic Dry Index. It's a marvelous indicator. It's hugely volatile, so you must read it carefully. The price of shipping bulk goods around the world, the cost of doing so, and that steep V, and then the long, hard slog starting, and the data is reflected again. What's COVID going to do to all of this? Well, here you've got six countries, and the data runs from earlier this year, just in the early days of the pandemic, right through to the present. And the first thing I show you, these red lines are new daily infections. And early on in each chart, you see that little blip. That is the March and April infection spike playing out. And then a degree of flattening out through the northern hemisphere summer, and as the northern hemisphere moved back into autumn and lockdown controls were eased, you see these alarming escalations in infection numbers. We don't think it's the same thing that played out in March and April, and you shouldn't be as alarmed as the figures suggest to you. And the reason for that stands out when I show you this black line, new daily deaths. And the relationship's different this time round. Early on, admittedly, testing was still getting off the ground. The relationship between tests and deaths, the ratios this time round are very, very different. Our outlook is that it's likely to remain the case. However, in the free world, political leaders fall under pressure to act. And that inspires some of the now new moves towards lockdowns in parts of Europe, curfews in France, etc. The Americans, under their new leadership, they'll be pressured to move in the same direction. The consequence is going to be to dampen, for an initial period, the pace of the global recovery. But we're not yet at a point where we're going to make the call that it's going to reverse that recovery. It's just going to make the slog longer and harder, but still gradually, perhaps in an upward direction. What you see in the US death data towards the end there, that's what we anticipate now you're going to see happening to those curves in coming weeks in parts of Europe as well. South Africa and a new lockdown, yeah, that's on the cards if we see death data increase here. We're not seeing that at the moment. There's almost nothing to suggest that in the charts. So for the short term in South Africa, not a prospect. See deaths lift, you'll see some sort of conflagration of lockdown mechanisms put back in place in this country too. So we're upbeat on the world, the prospects for recovery relative to some of the analysis put out by other groups earlier this year. We've actually done a lot better, I think, than many people had feared would be the case. How does this feed into South Africa? Let's start with the politics of the country. The chart you're looking at here runs from 94 to 2019. First thing I show you, these gray bars, economic growth. Read them off the right-hand axis. The story is a straightforward, quite simple one. Strong recovery in the first decade and a bit of democracy, and then the slump into the second decade. Make it more complicated. I've put on this yellow dotted line for you. It's a measure of living standards, and specifically, the indicator is the proportion of households without electricity. Dawn of democracy in South Africa, 50% of families don't have electricity. But by 2004, a decade in, an amazing things happened, and the proportion is down to 20%. But thereafter, the second decade, the rate of improvement in living standards here measured by electricity begins to slow and then reverse. The pattern is true for living standard measures across the board, and that little reversal at the end, you'll see now, South Africans are immensely sensitive to these little tremors and their political implications. Some of that sensitivity you see in this black dotted line. You read it off the left-hand axis as well. It's a poll question. Are you confident in the future of the country? As Mr. Zuma was gearing up to take charge, 60% of South Africans said they were confident in their outlook. By the time he departed, that had fallen to 20%. Now, overlay all of this with an explicitly political indicator, ANC support levels in national elections. And I take you to that third little flag from the left. It's the election in 2004. The ANC is stronger than it had been under Mandela in 94. It's in fact 6 percentage points stronger, and that is a remarkable thing. Our call at the time is that the reason for it is that life in South Africa was getting much better than the media and many activists were allowing the Mr. Mbeki to take credit for. You see it in the living standards indicator there. I can also tell you by that point, the number of South Africans with a job had nearly doubled. Real per capita GDP was rising at levels we'd last seen towards the middle years of the 1960s, and I can go on and on with this stuff. Our call then was ANC voters do not vote on liberation loyalty. They vote on material circumstances, as in the main do voters around the world. And the flip side of that coin was, should South Africa's economic prospects turn and living standards stagnate, ANC is going to get hammered. It's exactly what happened in the subsequent 3 elections, culminating at the party at 57% last year. Factor in now the huge reversals engineered by South Africa's lockdown to the patterns one sees here. And the question does in fact become, how long do these guys have to stay in charge? An early indicator of the trouble that is brewing is this red little dots, these squares that I show you. Read them off the left as well. They show you what proportion of protests in the country are violent, picking up from 10% to 30%. Put the picture together, try to convince yourself these trend lines don't feed off each other. We've tried to do that with ourselves. We're skeptical of our own work. We invite you to be very skeptical of everything we tell you. We can't get away from the feeling that in these patterns we see a key that will help us unlock future events. What are we, get explicit, what are we saying here? Are we saying the ANCs that they can lose? It's exactly the point that we're starting to make. Some corroboration for that is just pure hard, the stats behind how elections are put together in South Africa. This stuff is polling, it's done by ourselves, it's slightly better than what you saw out of the mainstream media in America over the past several weeks. And this specific question is asked in the run-up to last year's election. The question is, who are you going to support? Who are you going to vote for? It's a bit more complicated than that, but that's what it comes down to. The data you're looking at is broken down by age group. Amongst people aged 65 and older, about 59% looked to us as if they were super keen on voting for the ANC and would do so. But amongst people aged 18 to 29, just to give you a nice spread of the age categories, the figure is much lower at 51%. This is significant because we are a country today where only a third of people are over the age of 35. And that older bracket already registers and votes in to a disproportionate degree relative to younger people who aren't registering and voting to the same extent. And if you factor in that those older people are already at near max life expectancy for South Africa, and you run future elections just on the demographics, the age structures of the voters, that alone gets you to the conclusion that 2024 could be a 50-50 business, even before you factor in my earlier point that material circumstances dictate ANC voter trends more than anything else, certainly not historical loyalty, and factor behind that this devastating setback. I'm going to show you some more of that on jobs numbers and the like, triggered by South Africa's lockdown. So the macro trends suggest to us that we're at the brink of a great political realignment in this country on a scale of what we last saw in the 1980s and the 1990s. Socioeconomics are the key driver of that. Peripheral issues are accelerating the trends we see there because of the brand damage the ANC suffering, central to which is the bogeyman of corruption. Now, we delved pretty deep into the management structures of the party, the most important entity of which arguably is its executive committee, which has 80 ordinary members. And that delving, we were trying to look at the depths of the reach of corruption within that body, and the results were astonishing. 41 of the 80 ordinary members of the executive committee can be implicated in allegations of serious corruption, enough to go to jail for 15 years. 8 definitely not implicated, absolutely in the clear. And 31, the balance, there's not enough to say either way. And this is a structural problem that repeats itself in the party. Here you see it through corruption. I can also show it to you in terms of ideology or other balances of power, where the internal balance in the party is skewed heavily against reform. Our call is that the anti-corruption moves you've seen of late are more a public relations exercise to blunt criticism of COVID-related corruption. At this time, our call is there will be no firm move towards corruption, sufficient to clean out the Aegean stables, given that the people that would green light that view, in too many cases, risk falling victim to the consequences of their green lighting. But if that looks a bit sad to you, there's another side of the political world that analysts miss completely because they don't have the data. And that's not the side dominated by the politicians, it's the side dominated by the people. Again, deep dive polling done by ourselves going back many years suggests that our country sentiment in the country is very different to what you read on Twitter or what you see represented in the mainstream newspaper. Here's one insight into that. The question is, should sports teams be selected on racial quotas? Or should merit predominate? People saying no to racial quotas, about 15% of the people saying they support the idea it should be quota based, 15%. People who say no, merit appointments alone are 83%. Now this takes you down a rabbit hole of debates about affirmative action and redress in sport. That's not where we want to go with this. Where we want to go with this is to say this is very at odds with dominant wisdom or opinion about how South Africa's various social and economic strata regard each other. There might be a much bigger pool of centrist or moderate opinion than a Twitter would allow you to believe. So we proceed. Scores of questions are asked. I'll show you just a few highlights. Do you care what the race of the teacher of your child is? Now, that's quite a good question, because what you want for your kids says a lot about probably how you view the world yourself. It's important that your kid's teacher is the same race as you are. Only 15% of South Africans flag that. 84% say it doesn't matter. Yeah, to an extent, people are going to lie to you on a poll like this, but the numbers are so far apart, and they resonate so much with so many other poll questions that we begin to ask, that we do begin to develop this view that there is this deep, moderate middle, perhaps even center-right middle to South African politics that you don't see unless you do this deep dive type of analysis. The question here, I've abbreviated it at the top of the chart for you, but what it says is you know, should we all go our own way now? We've tried the democratic experiment, hasn't really worked. Or do different groups, race, class, ethnicity, actually need to work together if each individual group is going to succeed? Agreeing on the working together is 88%. Disagreeing is a small minority of around 10%. I'm pretty confident, having looked at this kind of stuff for a great deal of time and done this through a range of polling firms and agencies and changed up the questions, that there is this moderate center to South African politics. Significant, given that today there are more people who are entitled to vote who don't vote than the quantum of people who votes for the ANC. And the non-voters aren't lazy and stupid and don't know that they should vote. If you poll them, they don't see anything they want to vote for. And slowly you start to bring the strings together. I've told you, I think we're sitting on the verge of a transition. I've told you, I think moderate opinion predominates in South Africa. Just add those two insights together, and you can see that where I'm going with this is a very different conclusion to what you're subjected to if you read a South African newspaper. Now, if there is a great transition, it's going to be triggered out of what's happening in the country's economy. And for the short into the medium term, the outlook there is not particularly good. Perhaps the best single predictive indicator of the performance of the country's economy is the leading indicator produced by the central bank. It's been done for decades. I show it to you since '94. The rule on the indicator is if it rises, you can expect that the short to medium term picture on the economy will look better than it does today. If it's dipping, you can expect the opposite. And whether you on this chart go back to pre the financial crisis, that steep V just center right of the chart is the crisis, or whether you start after the financial crisis, the trajectory is not great at all, even before you get to that COVID dive. I'm going to get more into some numbers now for you, but we don't think the short to medium term growth outlook for South Africa is particularly appealing at all. And that doesn't change in our view until we hit this moment of political transition. Where does this take us? Well, it takes us into an impossible financial position. 1990 as a country, 93, 94 into 2023, 2024. National revenue as a share of GDP, that's sharply up to sort of flirting with record all-time highs in pursuit of just some crazy numbers on national expenditure to GDP. In the long term, not sustainable. The short to medium term, there's sort of various sort of fiscal gyrations one can engage in to try and sustain this. But without a strong return to growth, you eventually checkmate yourself in a fiscal and perhaps in the fullness of time, but that's still very far out, a default kind of crisis. Growth outlook itself, what do we think it is? Well, our calls are on the left of this chart. Mr. Mbowene's calls of 10 days ago to the right. Yeah, we're a bit further south on him than growth for this year. We think around -10, they're at -8. These are incredibly deep negatives. A bounce next year, not a recovery. I think it's more low base effect of this year's data. And then into 2022, we see it coming back to between 0 and 1. Mboweni sees it coming back to 1.7%. There's a lot that's significant in that. If the finance minister was convinced that reform is on the agenda and that energy bottlenecks would be sorted out, he wouldn't be predicting South African growth at that level. He drops his forecast further, in fact, into 2023. He goes down to 1.5%. By that stage, we think emerging markets will be back nearer 5. So the forecast out of South Africa, its treasury, we're going to be growing at about 1/3 of the rate of emerging markets. What does that mean for the deficit? Well, we're a bit further south again than the Treasury is. They see the figures coming back more strongly into next year and the subsequent year. We're cautious on that. We think their growth outlook is overdone, and we think the expenditure cuts that are on the agenda are politically going to prove to be too difficult to drive through in the main. But that deficit outlook requires a longer term analysis. And I give it to you here from 1913. It's South Africa's budget deficit. The last three lines, those yellow ones on the right of the screen as you look to it, that's the Treasury's outlook now. And even if that outlook materializes, the deficit on the 3-year view is still going to rival debt South Africa last saw as apartheid was collapsing. Pre that, the events around the Second World War, and before that, if you go all the way to the left of the chart, the First World War. Now, deficits do prompt, running out of money does prompt political reform. It's a sort of rule of thumb of sorts. It certainly contributed to Smuts' defeat in 1948. It was the thing that really nailed the Nats and brought apartheid to an end in the late 80s and 90s. And our argument for you is put on your radar that given the depth of these figures, the same political realignment thing is going to play out for South Africa again this time. In terms of debt, yeah, we're a bit further north than the Treasury this time. We see breaking through 100% into 2022. The Treasury is still at 90%. Default? No, we don't think there's a serious prospect of a default into the medium term. Foreign currency denominated debt reserves are sufficient to cover that. And even on the domestic debt, if push comes to shove, you can create some money and pay it off, and later, of course, endure the inflationary effects thereof. But that's a bit beyond the short, certainly beyond the short term, and perhaps a bit beyond the medium term window. Now, given this running out of money business, is it going to trigger structural reform? We don't think so, not out of this administration. To kind of give you our take of the reform spectrum, we have this spectrum itself that you're looking at. The dark red areas that are of policy that will further undermine South Africa's competitiveness. Dark green areas of policy that will see us become more competitive. So you get things we call counter reforms, decisions that will still be made that will further undermine South Africa. Areas that need reform where nothing's going to happen. Areas where we start to get it right. And then areas where we do absolutely the right things. And then if we take the current view of our team, we think major issues group as follows. Under counter reforms, yeah, number one, property rights. It's anchor substantive human liberty. It's the gateway to real rises in fixed investment. I'll show you that data in a moment. We're still going to see some pretty firm moves against that. It's not land in the main. I think it's financial assets that are initially on the line. And then number two, you get to the question of labor. Number three, you get to the question of empowerment. Why do we make this call? Because we read the internal ideas and ideological balance in the present administration, and it leans very much in that direction. Areas which need reform urgently aren't going to get it. Yeah, number one on that list, another fundamental, it's the education system, and you can sort of run through that list. You get to things like policing, creating a more competitive environment for entrepreneurship. Not going to see, that's our call. Modest reforms, yeah, some. Telecoms, there's some moves on energy, visas on tourism, and SARS definitely has been turned around to a great extent. As we read the climate at the moment, and just as some background, we've been skeptical on Mr. Ramaphosa as a reformist from the earliest days of Nasrec. We think this is probably what the policy framework for South Africa is going to look like into the medium term, into 2024 and beyond, initially beyond that election. If we're right, we don't turn the investment picture for the country around much. 94 to 2020, this is fixed investment as a share of GDP. On the back of the Asian crisis in the late 1990s and with the commodity super cycle into the late into 2008 or so, yeah, the picture for South Africa got a lot better. Subsequently, it's not great, and it's remained weak under Mr. Ramaphosa, and the reason is the dearth of real reform on policy, real moves on corruption, and we don't think either of those two factors shifts fundamentally for the next 2 to 3 years compared to what you've seen over the past 2 to 3 years. Now, the economy stunts. What goes on in the country's labour market? Well, we can't address the structural exclusion of very many millions of people from participating in the economy. And I'm going to take you back to my political point towards the end of this section. The lockdown's been pretty devastating. Some really interesting data starting to come out around it. Some of the stuff I show you here, it's February to June, percentage net losses in employment, depending on what and who you are in South Africa. The left-hand side of this chart, as you look at the chart, amongst the sort of richest people, professional people, tertiary educated people, job losses have been considerable. But relative to what happens towards the right side of the chart, as you move right across it, you move kind of down the socioeconomic strata. By the time you get to rural people, women, non-tertiary qualified employed people, manual laborers, and the poorest 50%, they got hammered as a consequence of the lockdown. The hammering is of such an extent that we will get some of that back, I think, in the short term, but we won't get back everything that we've lost. And given the relationship between material circumstances of people and ruling party support, the idea that ruling party voters don't vote on liberation loyalty, they vote on material circumstances, a chart like this and the lockdown reasons behind it just become an accelerant for the thesis of South Africa's realignment. Without the lockdown, it was going to happen in any event. Here's a sort of international comparison of labor market absorption rates. Now, the absorption rate's a great indicator. Measures what proportion of people of working age actually have a job. And in the first quarter of this year, so this is pre-lockdown effects, South Africa's absorption rate, you see it there, 1, 2, 3, 4 from the right, at 42% is already uniquely low, given a cross-section of other societies. After the lockdown into the second quarter, everyone gets hammered a bit, but South Africa is down to 36%. I mean, on some measures, we're at half the level of absorption of other economies. The political consequences of that were inevitable. Lockdown simply accelerated them. And if you need some reminding, here it is, 94 to 2020. The total number of people employed in South Africa, and look how the jobs numbers double essentially through the Mbeki era. The rate of job creation then slows into the second decade. Run ANC support over that. And I think something's going on between these two numbers. Factor in the job losses I've just shown you. And if that relationship I suggest you does in fact exist, political consequences are going to be more serious than I think many analysts anticipate. Even if the economic outlook is a bit better than we suggest, and I don't think it's going to be, I think the risk's actually to the downside on the economic outlook. The ANC, the government's nonetheless checkmated on employment by what's happening in its education system. It's not a great chart, I'm afraid. It's not a happy chart. What you're looking at here is the progress of the grade 1 class of 2008. So every kid that was in grade 1 in 2008 tracked through their school career until they got to matric, and then what happened to them when they wrote maths in matric. And the data looks like this. Grade 1 2008, 1.1 million kids enrolled. 10 years later, they're the grade 10 class of 2017. Most of them are still there, so that's good. But between grade 10 in 2017 and grade 12 in 2019, this is the same cohort of children, half drop out of the school system. Only 500,000 of the original 1.1 million wrote matric in 2019, 400,000 passed, 200,000 well enough to go to university, 50,000 kids passed maths and matric at a grade of 50% or higher. And that matters a great deal. You see the proportions here on the black line, only 4% of kids are passing maths in matric with a grade of 50% or higher. And that matters because of this. We're back to absorption levels again in the labor market. I show you those for South Africa based on your highest level of education. And there's a skyscraper, the 67%. That's South Africans with a tertiary education. It's the only category that starts to compete with international norms on absorption rates. If you don't have a tertiary qualification, the best you can expect is a 40% absorption rate if you've completed your secondary education. And again, if I'm right, that the material circumstances of people will fundamentally drive, the fundamental driver of political decision-making in the country, checkmated on a number like this with a weak growth outlook, high deficit, this branding problem around corruption, the structural problems around dealing with it. You know, you almost get to a point where you begin to wonder why aren't more analysts saying to their clients, that you're standing on the brink of perhaps a greater series of events than you anticipate into the medium term. Quick word on energy, and then I'll turn to what I think is going to happen in the country. The data January 13 to earlier this year, it's the number of gigawatt hours distributed in South Africa. You see a familiar pattern in the data, so that should give you some confidence that the stuff's good. If you look deep into that pattern, do that for a moment. Go take any trough in the data, draw your eye downward on the chart, and you'll see the trough aligns with the middle of the South African summer. And any peak in the data, peak in demand, draw your line down, you see that you're in the middle of winter. The overall trend line is broadly downwards. There are promises now, assurances of 12,000 new megawatts on the way. I think that's slightly overdone. And if I'm challenged on that, one of the points I would make is to say, if that stuff was all on the way, why is Mr. Mboweni still seeing South Africa's growth rate dip into 2022 and 2023? He doesn't buy the story entirely either, and he certainly doesn't buy the story on imminent reform. Right, there's some context. We did it really quickly. Out of that, what's going to happen? We work initially as a team in scenarios. We try and identify what could happen, and then we narrow it down to what we think is going to happen. Scenarios we build around a matrix. One of the matrices we're working at the moment looks a bit like this. Fundamental question is a social question. Will South Africa's moderate middle, that we argue for you exists and is very strong, will it unite around itself over the next decade? Or will South Africa's sort of social strata fragment into all little bits, a country that turns against itself, the wealthy go off into enclaves, the poor get particularly angry, and it becomes a bit nasty? What happens on that spectrum? While that's playing itself out, what happens on the policy spectrum? Do we get to a point on the right side of your chart, of your screen, where we do have a workable reform strategy, which we don't have at the moment? Or does that remain the case? We don't have a workable reform strategy, and that plays out over the next decade. How these two questions relate to each other create four quadrants, and each quadrant is a scenario. The best case, the middle unites, we get a reform strategy, we call it the rise of South Africa. The worst case, we break up, we fragment, squabble terribly with each other, fight even more, becomes a bit nasty, and no reform strategy materializes, the fall of South Africa, and hence the title of this briefing and the book upon which it is based. Then more interesting things happen. What if someone tries a reform strategy, but the society shoots it down? It's too divided, the civil society says it's too conservative, it's selling out to monopoly capital, the media gets all negative on it, and it just never gets off the ground. Or what happens alternatively, top left, if the present administration never delivers a reform strategy, but the moderate middle in South Africa unites? Well, here come the answers. The rise, best case, top right, looks something like this. You might call these things flags or markers that you should look for. If you see them going up, it's a term that comes out of Clem Santer's work on South Africa. If you see the flags going up, you can be pretty certain this is the scenario that you're entering. COVID is going to be a major trigger for structural reform in South Africa. You'll see that in real sweeping fundamental reform, not flirting with dangerous ideas. EWC as a risk is off the table. Land reform is done properly, and we finance the deficit through growing the economy. Labor market, mass deregulation to raise the absorption rate, given the urgency of doing so. Empowerment policy turned on its head to actually do what it should, accelerate poor people into the economy. And there's no attempt at trying to get an airline off the ground. If it doesn't pay and it's a state-owned company, it goes. Economically, therefore, we will be geared to follow the world into a strong post-COVID recovery. End of this decade, if the world holds up, South Africa's averaging emerging market growth norms, debt and the deficit flattens, the currency finds a floor, it strengthens in a big way relative to the dollar, which together with South Africa's overall upbeat performance makes our domestic market the star outperforming stock market of the next decade. Labor absorption sharply up, Schools are being turned around pretty quickly. Living standards back on the trajectory we last saw into 2007. We're a free society. ANC support expands given the relationship between material circumstances and that support. The reformers have won the upper hand. State capture suspects are in jail. It's the only way to knock them out of the political game. And South Africa is a bastion of liberty and prosperity in the world. And if you think this is a bit much, can't surely happen. Best I can do is to urge you, if you're too young, you might have to read a bit about it. Cast your mind back to August of 1985, when Pierre Botha, in circumstances not dissimilar to those in terms of the economic indicators South Africa confronts today, said there would be no reform. He said, I will not, to quote from that night, I will not lead white South Africa down the path of abdication and suicide. A decade later, Mr. Mandela was in the union buildings, and in the subsequent decade, the government, the union buildings had engineered a budget surplus and a growth rate of 5%. That was maintained for 4 years on average. That hadn't happened before that, for that number of years, since 1970. So don't write off. These are upside risks for South African investors. Don't write them off. But it's only one scenario. Number two, jump to the left. That counterintuitively was the bottom right of the matrix. It goes a bit like this. There will be an attempt to drive reform. The current administration, frightened, will realize, oh, we've got to turn the thing around. And they'll come up with a decent reform strategy. And to their horror, it will be rejected by the broader public, the media, activists, and civil society as being too hard, too rough, too conservative, selling out to monopoly capital. And it will fail because it's rejected. On the back of that, we're into coalition politics by the middle of this decade. So the policy gets all gummed up in the dramas of coalition. On the back of that, given that living standards have been allowed to stagnate for much of the rest of this decade, and that the slant on pragmatic reform is negative in the country, the 2029 election sees South Africa take a big leap to the ideological left. As a consequence, for this decade, we're not going to follow the world out of the global crisis. Growth averages around 0% for a decade. The currency holds up through the short term only. I think it does that. There's some charting that suggests commodities might come back pretty strongly into 2024. There's yield in South Africa, not going to be much of that in the rest of the world. And we're a pretty liquid place and our data is really good. So, you know, if you want to take a punt on South Africa, a bit of speculative hot money might not be a bad place for the next couple of years. And that's going to artificially hold up the currency in the face of weakening political and economic and policy fundamentals, but it won't last forever. It sort of creates a false certainty, and then through the medium term on that election defeat, probably, bang, the currency takes a dive. 2030s. Going to be really rough though. Social trends, not much is going on to improve living standards. We're in a gentle sort of drift broadly downwards. We remain a free country though. The reform strategy has been rejected in a perfectly democratic manner. The ANC loses an election. Popular frustrations grow. The idea of reform is unpopular, and therefore we can go only one way. We take a sharp leftward turn, sort of populist Venezuelan type turn, and we get ourselves into all manner of trouble in the 2030s. Worst case for this decade is what we call the fall of South Africa. Now that was the bottom left scenario. It goes like this. Full spectrum of RET, that's radical economic transformation. That's the sort of last sort of phrase of the Zuma administration as it went full populist in the hope of clinging to power. It's pure RET off the bat this time. Government's going to act on EWC. That's the major flag that's going to go up. It's not about agriculture, EWC in the main. I think farmers are way at the back of the expropriation queue. It's financial assets, it's prescribed assets, it's pension funds being nationalized. It's national health insurance, the consequence of which does severe harm to the private healthcare sector here, meaning in the longer run that South Africa won't have the ability to easily retain a middle class, the implications politically of which are immense. But it starts with that EWC threat. We are worried as a team of analysts that our clients do not appreciate the full extent of the implications of EWC. They tend to get caught up in a very shallow media analysis. that speaks, for example, of the land reform bill, when I think land reform is very far down on the actual EWC agenda. Consequence, we're in deep recession for this decade. Perhaps global trends have turned against us as well. Debt deficit takes off, government prints money, currency absolutely smashed. You get into sort of hyperinflation territory and the like. 2 years ago, the Argentinian peso was trading, I think, at around 16 to the dollar. I think this week, figure is closer to 80. This chain of events can make the same thing happen in South Africa. Social trends, labor market absorption rate doesn't go anywhere, living standards are declining, and that bottom point, skills and the middle classes, they take a look around, they think this isn't great for them, and they follow where in many cases their money has already gone, run for the exits. Political trends, it's nasty, it's populist, it's racial nationalist, the state capture factions have driven out the reformers, and it's all going horribly wrong, and it won't recover for a very long time. Now, number 4, step to the right. I think this is where the trends lean at the moment. Look, take all of them very seriously, hedge yourself around them, develop proto strategy, and you'll be rock solid in South Africa. But if you lean towards one, I think this is where we're headed. It's called step to the right. It works like this, the flags. Expect an impossible compact on policy. That's what you're going to hear about, compacting. We're going to have expropriation that brings investment, higher minimum wages that create jobs. We're going to rebuild the country through an infrastructure program, even as we emphasize austerity in public spending. It's crazy stuff. It cannot hold together, and it won't. We're in coalitions in 2024. They're not great. But public opinion, public frustrations begin to unite increasingly around that moderate middle, meaning that the 2029 election, as long as the right political actor has got into play by then, which I think it might, see South Africa take a small step to the center-right politically. And that means a step straight back to where South Africa was under the RDP and Gear, Mandela and Mbeki in the early 1990s. As was then the case, we will then see on the back of that the beginning of South Africa's real recovery. It happens into the 2030s though. Short term, no real recovery because there's no real reform. Debt and the deficit escalates. The currency is going to hold on the short term, we think now, given what I said to you about some charting on commodities and the like. It's then going to slide rapidly through the medium term because it looks like the South African politics has gone wrong. There's no hope of reform. And then it storms back in the longer term into the late 2020s and 2030s as the political realignment begins to be understood by markets, by analysts, by corporations and the like. But for the time being, GDP growth is stymied at a fraction of EM averages. Living standards slip, labor market absorption doesn't do much, but the 2030s are going to see a resumption of that very positive living standards track we were on into 2007. We'll remain a free society. The ANC is going to lose an election. We'll spend some years with unstable coalitions, and from those we'll take a little step to the center right. That won't make us unique. You're seeing it around the world, how slightly left of center governments lose, and how they don't lose to the left, they lose to the center or the center right. There's some nasty examples of that, Bolsonaro in Brazil, Orban in Hungary. There's some better examples, some quite positive ones, perhaps Modi in India, Johnson in the UK, and you get some peculiar ones, such as this era that America has lived through under Mr. Trump. On the data at the moment, this is how we work. We try and forget, we try not to hope, we try not to fear. With a good understanding of history, try and get a sense of the trends and how they hold together. If you ask me on probabilities, I tell you I think this is how it's stacking up at the moment. But check in with that advice from time to time. If you're not familiar with us, want to know more, we do a vast range of things. Protected podcasts on Monday mornings, myself and some of the analysts, briefings such as these. A lot of data and information. If you want to know what's going on, you can ask us, we'll send you a note. And then if you're trying to make a decision on South Africa, bring us into that. We don't know your business, we're not sector experts, but we'll give you a sense of how we think the 30,000-foot view can impact on that decision. With that, I'm done. Graham, back to you. Thank you very much for listening to me this morning.
Frans, thanks so much. Okay, so I definitely think you've given the audience some food for thought, some really interesting data there for everyone to ponder. Quick question: the rands dropped to 1590 or 1580 even now, dropped to 1581. I think we were at the low due to the US elections. What's your take there? What's your punt on the elections and the rand?
The punt on I haven't looked at what's happening in our, look, Michigan's gone, Wisconsin's gone, Pennsylvania's still in play. Some of the Republican thinkers in America think they might squeeze Pennsylvania by a margin of 20 or 30,000 votes, but it goes either way. If Georgia remains on the Trump side, his last gasp is to come from way behind and win in Arizona. I think it's a bit of a stretch for him. In the client notes of recent weeks, we've been suggesting it's Biden. I think that's where it's leaning at the moment. Important is the Senate. I don't know if everything in the Senate is over, but it looked like, but go and look. Looked like the Senate will stay in Republican hands. That's the ideal result in America. Biden wins the Senate in Republican hands because the Democratic moderates will need a Republican Senate in order not to move fast on some of the slightly too radical policies they've campaigned on. I think this is going to be welcomed by markets, currencies, and the like. And will America now, under its new administration, once we know what that is, will it continue? The real question, I think, it's really the question on the global economy and then on the dollar, and therefore on us, and on emerging market currencies. You know, you've been in 20 years of stimulus, going back to the dot-com crisis. It starts with the US deficit, then it starts with the creation of this money in QE after 2008. The quantum of dollars in the world relative to the size of the global economy shifts appreciably. They addicted to this stuff, they can't stop. Is the next step a sort of Marshall Plan style? Like, I get this idea from another analyst colleague who's very kindly shares the thought with me. Big infrastructure spending, if that's the case, you've got a bit of an upside for commodities, you've got a bit of confidence back into the world, you get this Pavlovian response to new stimulus, probably holds up the rand through the medium term to a greater extent than South Africa's unique fundamentals would, I think, justify on their own. But you guys are. I can give the macro on currencies, what drives it. On the short-term moves, you're far more expert than I could ever hope to be.
Sure. No, listen, it's a question. I mean, I've bet, stranger things have happened. So even looking at data, and I bet our colleague Gareth, the fellow director, I bet him $100 that Trump was going to win. You know, you can't expect it, but let's see. So I'm waiting to see if I'm.
You know, it's going to come down to inside 100,000 votes in America.
Yeah, so very, very tight. I know we've run out of time, guys, and thanks so much to everyone for joining, but I think this is, the presentation's been really insightful and thought pondering. So there was a question posed by Brett. I just want to pose that to you, Frans, if you got some time.
Yeah,
he says, yes, we will have a political realignment in the making. Your suggestion is that it will be to the center right. However, worldwide, it has been the populist people who have risen. Do you not think that the desperate will make the desperate choice and bring the Malema-type leader to the fore?
Well, that's my bottom left fall scenario, and that scenario there's because it's real and it could happen. And my advice would be to hedge yourself on that to a very significant extent. So I don't dispute that could be the drift. I'm just, when I get to what place is there for an analyst to begin to say that his largely subjective call based on a lot of experience, a lot of expert colleagues is center right. What buttresses that? What supports that? Public opinion is center right in South Africa, far greater extent than I think anyone understands. Number one. Number two, the assumption is the basic trappings of the market intact. It can be populist, as it was in Brazil. It's populist, but it's not left, it's right. It's anti-left. In Hungary, it's populist. In America, it was populist with Mr. Trump as well. So it can be populist to the right. In the populist right, but it's ideologically takes you to the same conclusion. In South Africa, is this at all around? Well, it is, amazingly. I don't think he's it. I don't think he's going to make it, and I don't think he's got the right advice and any other things which aren't relevant for here. But Herman Mashaba is a phenomenon in our politics that we've needed over the last however many decades, never had. Black conservatives, capitalist, unapologetically, populist on immigration and so on, slightly contradicts the capitalist, but what it shows is that he could make it as a politician. Loudly anti-racist. It's very clever because it will resonate with mainstream South African opinion. I don't think it's going to be him. I don't think he's going to make it. I don't think he's going to make it at all. But I think his failure will be left on the political battlefield, is the way to put it. And it will make people think, because that option has never been available in South Africa before. It's been nationalist, one way, largely socialist, as apartheid was. It's been nationalist and lost its way under the ANC. This is new. So I think I can see it in the public opinion. I've got international precedent, and I've got a live example on the ground of something that we've been calling for a long time. So I'll argue the case. I think it's top left, but if I win that argument and you forget about my other three scenarios, I'll get very worried about how you're positioned on South Africa. We work in scenarios because small changes in the present conditions of systems bring about such huge shifts in their future circumstances that traditional single point forecasting methods do not work in this kind of risk planning. You need to see the spectrum of possibilities, and you need to turn as the flags turn around you. Graham.
Yes. No, okay, just a quick one. So from our discussions yesterday, we were chatting and we were saying, do you see where the political challenge to the ANC coming from? Where is it coming from? And you made a call about 2024. Do you want to maybe just chat about that?
I don't think it's coming from any of the present players, because you're looking in the wrong place. What's the biggest political party in the country today? Sorry, I've got a bug buzzing around. What's the biggest political party in the country today? It's people who've decided to stop voting. There are more people who are entitled to vote who don't vote than the total number of people who vote for the ANC. It's a huge vacuum. And we poll them, and they don't not vote because they're stupid or don't understand voting, or they don't vote because they're quite good political analysts. And they look at what's available and they say, frankly, this isn't going to do it for me. It's not actually going to, if I live in a shack on a sand dune outside Cape Town, it's not going to get me out of that shack. If I'm a person who's worried about the sort of prospects for the country and its economy, none of these guys are really going to get me out of the hole. So we're sitting with this vast market. Most analysts look into the tired old political system and try and figure out which of them is going to lead us to greatness. I don't think it's going to be any of them. Collectively, they'll play an important role in bringing us to the point of coalition. And out of that, all it needs is put some real money behind a center-right political offering. It sounds crass, but these things go together. Biden spent his way to victory, spent more than any Democrat campaign has done before. I read, I might be wrong. And put real money against the center-right, behind the center-right option, its chances of dominating a future coalition or leading South Africa outright becomes pretty good. So I don't think it's anyone that you know. The people who will lead South Africa to success, if it is to be led to success into the end of this decade, into the 2030s, are people, movements, and organizations that do not at the moment exist.
Frans, wonderful. Thank you so much for your time. A lot to think about. Really appreciate it. And to all our guests and partners that have joined us, thank you guys for the business. We hope you found it insightful. We've left contact details. We will be addressing all the questions that have been posed to us. So thank you very much for that. I have put the Center for Risk Analysis contact details in the chat box as well for you. You can contact Sherwin directly if you're looking to chat with Dr. Cronje or pose some questions directly. But we'll have a look at it. We'll give the answers to you guys. We're going to have a recording of this up on our YouTube channel, so please subscribe to that. Other than that, guys, it's November already. Can you believe it? So, sure, end of the year, COVID is hopefully behind us. Perhaps the second wave, who knows? Depends what your take is. But from Currencies Direct here in Cape Town, just want to say thank you very much and have a wonderful day. Cheers, guys.